Hello, I'm Greg Bennell. Welcome to Market Call tonight. Our guest is Jaime Carrasco, Portfolio Manager at Canaccord Genuity. I want to take your calls and emails and tweets on precious metals, REITs, utilities, and energy. So give us a call. Toll free, 1-855-326-6266. You can send an email to marketcall@bnn.ca or you can tweet us at Market Call. Jaime, good to see you. I haven't seen you in a while.
How are you? And thank you for having me back.
I'm looking at your note here. There's some interesting stuff and perhaps some stuff we haven't been talking about. China, oil contracts denominated in their currency. And you're saying this could be a game changer.
Well, I think it's a game changer because of the convertibility to gold. They're remonetizing the pet rock. And I think for a number of years, I've been looking at the puzzle as it's shaping. And back in 2008, I said, you know, whenever we get into a historical situation where governments take on debts that will never be paid back, the only way that history has resolved the issue is to change the currency reserve. Today, the currency reserve is the U.S. dollar. In the 1930s, it was the pound. The power transferred to the dollar for the very same reasons. I think history is about to repeat itself. China, by signaling that they're going to be buying energy, the biggest piece of trade, in yuan, convertible to gold, in essence has remonetized money, ultimate form of money, which is gold. And I think that has some massive consequences for the global economy as we go through this transition. What they're really saying is the Silk Road or the One Belt Road, all of the infrastructure projects in Asia are our backyard. Why do we need to use the dollar? And what they're doing is they're remonetizing all the gold that they have taken from the West since 2008. We have seen a transfer of almost 18,000, almost 20,000 tons of transfer over to China. And now they're able to remonetize that. As that moves forward, what's going to happen is that we're going to see money itself, and I mean gold, because of the convertibility feature, start to play a much more active role within global trade. It'll also deal with the credit cycle that we've been under. And now it's important to understand that the basis of that credit cycle is the petrodollar that Henry Kissinger sets up in '75 because it forces the world to start using dollars and by default U.S. credit. We're at the end of that cycle, and I think the Petoryuan is the clear vehicle by which the Chinese are going to transfer the monetary power over to themselves.
That sounds like a pretty considerable shift in the terms of the way we think of global trade, the way we think of money, or at least we used to think of money in that way, of being backed by something like gold and having a standard there. China, we've read so much about the fact that they're trying to position themselves as the new global superpower, and not really in a military way, but in a financial way, in a way of being what the Americans used to be. The Americans were expected to show up and make the peace throughout the world. This current administration in Washington doesn't seem to want to do that.
Well, if anything, they're breaking up all of the trade deals that they've done in the past. Everything's coming unwound. But more importantly, I would say I think they know exactly what's happening. Because if you notice, the tariffs were set up to start on Friday, right prior to the Petoryuan. So what is the message that we're listening to is that the tariffs are the cause for all the disruptions that are occurring. I would argue that both are definite disruptions. But if you only look at the tariffs will be done one day and we'll move forward. But are we going to move forward within the same monetary system as we were working prior to that start? I don't think so. I think that that's a shift that I'm going to be looking at more importantly. And also the fact that Asia, and I'm talking about Russia, I'm talking about India, I'm talking about the Middle East, understand what gold is. We've just forgotten because we have 2 generations now that haven't worked on the gold standard.
Where does that leave us? I remember a story about a year and a half ago saying Canada basically has next to nothing when it comes to gold reserves.
Well, it is a concern, right? It is a concern because if our currency becomes, if the monetary system becomes changes to something tangible as it has for almost 3,000 years, again, as we cleanse this, we have a massive inflationary problem, right? And that's part of what Greenspan has been warning, the stagflationary issue as a result of the unwinding of the credit cycle. Now, how do you protect yourself? I see it as a massive opportunity because it means that gold itself is ridiculously priced right now in relation to global trade. So that creates an opportunity, and that's what I'm positioning myself to benefit from, is that shift as it occurs.
All right, fascinating stuff. Great start to the hour. We'll be back with Jaime Carrasco. He's Portfolio Manager at Canaccord Genuity. He wants to answer your questions about precious metals, REITs, utilities, and energy. So give us a call, toll free, 1-855-326-6266. Welcome back. back to Market Call tonight. Going to start things off with an email from Ron. TransCanada, could I have your opinion on TransCanada pipelines?
Well, I like the pipelines. You know, they are monopolies as businesses. I like the fact that we're not building any thanks to the environmental issue. I like the fact that they are monopolies and the cash flow is pretty steady. We have some changes in the U.S. lately, but I think with the decline they've had in price, that's pretty neutral with regards to them. What's more concerning about the pipelines for Canada is the fact that we haven't built any to the coast, right? And we can't sell or ship our energy out east. So we're beholden to the U.S. going forward in terms of our sales. But TransCanada and all of the pipelines, since we don't have any, are great investments, especially for cash flow generation. I like them for that, but you have to be careful with them because of the interest rate exposure.
I think the amount of debt that a lot of those big pipeline names are carrying.
They have that, but they are infrastructure projects that require debt to be built. Now with TransCanada, though, they have a fairly large pipeline of, and their purchase of Columbia really added a lot of pipe to them. So I do have that one within the portfolio. I like the yield, and it's one that I've actually raised cash within the equity income portfolio that I have for people, and I'm looking to add a little bit later. And TransCanada would be one of those because I think it's such a solid vehicle that I think the yield is quite sustainable. I am looking to generate yield from outside of Canada, though, as much as possible going forward, only to cover some of the currency issues that might arise.
All right, interesting stuff. We have Tony on the line from Calgary. What's your question, Tony?
Hello, how are you doing today?
Good, Tony.
Yeah, my question is on Painted Pony. I just want to know Jaime's outlook for the short and long term. Would he be buying at these prices? Thank you. Bye.
All right, Painted Pony.
Well, Painted Pony is not one that I have in the portfolio, but it's one that we follow. And actually, I was looking up the research report because it's one that has attracted me quite a bit. We have it at Canaccord as a speculative buy with a 212 target, I believe, going forward. Hold on, what is the price?
No, sorry, that's 219 in Schroms.
No, that's a current. It's a $4 target.
Okay,
we have it with a $4 target. 212 was the price when the report was published. It is a speculative buy. It is a more junior play, and because of that, I think you should be careful in terms of volatility and how to position it within the portfolio.
Kind of selling we've seen in the markets broadly, or since the beginning of 2018. You have fund managers saying there's opportunity. I look at Painted Pony's chart, and obviously it's a lot cheaper than it was this time last year. You feel at the sort of enticing valuations now?
Not really. Personally, I'm still quite conservative with regards to the market going forward. I'm sitting on about 15% cash within all portfolios. I think that volatility going forward might start to increase, so I'd rather wait and see if I can get anything a little bit cheaper later on in the year. I want to know what happens to, you've seen the 10-year bond starts to come down, so you're starting to see a little bit of the flatten of the yield curve, but still tonight 278, 279, still pretty close to the high end. So how does it play out? Right now, I think it's time to be cautious and wait it out. Also, I think the trade issues, if you look at the market on its own since February when we had the big decline on the Dow, what we're looking at is we're getting rebounds, but they are lower, what's the term? They're higher lows going forward, right? And it's kind of starting to do this. So going forward, I think I would be a little bit more cautious and see where I would clean up a portfolio to raise cash more than allocate money.
Very interesting. We have Jim on the line from Sudbury. Jim, what's your question?
Thank you very much, gentlemen, for the call. My question would be on the price of gold and how the price of gold is fixed to the American dollar. And so my point is that I listened about 3 years ago to a Communist Party talk show, and the price of gold was pegged in China at $2,050 an ounce to produce. And the theory is that why would they ever want the price of gold to go above $1,300 an ounce when it costs them almost double to produce it? Like, shouldn't gold be unhedged from the American dollar and just let it float? And that would be my question. Thank you.
All right, gold.
Well, that's an interesting question because it addresses one of the first issues with gold, which is the current price. I've been working under the assumption that gold has been manipulated. I think that's coming out more and more, that the price has been manipulated by central banks. Why has it been manipulated? Well, if gold was sitting where it should be sitting, and here I would quote Terry Duffy, the chairman of the COMEX, who was interviewed about last summer, talking about gold, and his answer was, what's going on with the price? He said, if you look at inflation, right now gold should be trading somewhere between 2,000 to 3,000. If you look at what's going on with the world, it should be trading somewhere north of 5,000 to 6,000. That was his answer. I think what he was really intuning to is the fact that it's being manipulated at the COMEX, and be careful. Having said that, if gold was trading where it should be now, would people have been running into the Dow as much as they were running into? No, they wouldn't have, right? And because of that, I think that there is manipulation that has taken place. Having said that, look at China. China has benefited from that manipulation on whoever behalf has been done, because they've been able to walk away with quite a bit of the physical supplies that were sitting in Western central banks. They've also been subsidizing the gold industry at about $2,300 an ounce production cost, just to keep gold producing, and 30% of gold is produced between Russia and China. So, where do we stand today? I think that we have to look at the fact that gold, as money, once it starts to function, all of the future contracts that have been used to suppress the price won't be working anymore, and we should start to see a rise. So that is a benefit. I asked one question: why is JP Morgan right now sitting on almost 700 million ounces of physical silver? I think they've been part of the price control mechanisms. They know what the net results are going to be, and so what they've been doing is buying physical silver, because that'll have the biggest leverage on the way back up. I actually do prefer silver producers to the gold producers, and I'm overweight within my precious metals into the pure silver, because there's much less silver, and then we have the gold to silver ratio, which is completely out of whack.
Right, fascinating stuff and a deep dive there on the metals. We'll be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity. Let's answer your questions about precious metals, REITs, utilities, and energy. So give us a call, toll free, 1-855-326-6266.
Hey, can somebody pass it?
Started the show talking about gold, trade, and tariffs. We have some news crossing across the Bloomberg. The United States now issuing a list of Chinese products proposed for tariffs. You remember when Donald Trump talked about wanting to levy those? They said there were some details in coming weeks. It appears some 1,300 industrial, technology, transport, and medical products as part of this push against Beijing on intellectual property. 25% tariffs on about 1,300 products. So this seems to be another shot across the bow towards China, after China, of course, I mean, this weekend saying that they were going to strike back against pork and some other products. So things are getting a little tense here.
Well, it's funny because on the Monday after the tariffs started, the market ran up 700 points, so who knows what's going to happen, right?
Yeah, the reaction is going to be. Okay. We'll have a careful look at that one, obviously, in the morning when the trade begins, and, of course, in the pre-market. Let's take email from Howard, Tech Resources. He said, would your guest agree that Tech Resources is currently enjoying the best of both worlds? The prices for most metals are near record highs, and their interest in the oil sands has started producing. Does he see an increase in the share price?
Yes, actually, I like Tech. I've been quite neutral on the base metals for quite a while. I prefer the precious metals only because I see that readjustment. But if you look at copper, copper's had a hell of a year. It's it's sitting at 325 right now. If you can bring up
copper, I'll see what I can pull up in the
almost at 330 right now.
Yeah.
And we've had a pretty good rise over the last. It's built a beautiful base, and now it's starting to move higher. Now, because of that, I think that it's signaling the beginning of a nice inflationary wave, right? And tech would be the first choice to go after because it's so well diversified, and like the caller said, also we have the play in the oil sands. We have it right now as a buy with a $42 target. Again, tech is one of those that to play the inflationary wave, to play the base metals, it's it's really one of the best choices to start participating in the sector.
And we saw that huge run up in 2016. I believe that was about coal as well. So it's a pretty diversified player here in terms of the catalyst that can drive it higher.
It is, and that's what I like about it. It has definite different components. Within one the ones that will give you that diversified approach, there's very few, and that's why tech, I think, would be it's a really good choice within all portfolios. Also, at some point, this inflationary wave, all this money that has been printed has to enter the system, and tech would be a very good beneficiary of that.
Right now, it's only running at about a little north of 7 times forward earnings, tech. We have Joseph on the line from Scarborough. What's your question?
My question is on Jaime. I just want to know what you think about it, if you have a price target and for other potential risks and potential upsides from here. Thanks.
Well, price targets on all juniors, that'll be kind of hard, but we can talk about the junior gold. Actually, PDAC just completed in March, and it was the first time that I sense a very big difference in the at PDAC, in that the when I met up with all of the producers that I own, they are extremely well positioned right now, and even some juniors as well. Anybody that can be producing right now with a low cost of production in good quality areas has been making quite a lot of cash flow and solid balance sheets. What we see is that all of the cost reductions that the companies were going through started to implement back in 2014, 2015, kicked in 2015, and over the last 2.5 years, they've really benefited. So if you look at that move you just mentioned in 2015, that was because of coal in 2016, but we saw a very similar move within all of the producers because of the move of gold. Gold was going down to 1,000, then it goes back up to 1,360 by the summer of 2016. Well, the producers actually had the leverage on the way back up. Right now, if you can do some really good stock picking within the junior and some of the mid-tiers as well, and even maybe some of the seniors, you're going to get almost similar leverage, because what's happened now, the producers have pulled back, gold's still sitting at 1,300, so we have that earnings compression. But this time the balance sheets are even better within the ones that have been cleaned up and generated quite a bit of cash flow right now. And because of that, there's a number of them that look really good, but I think you have to do some good stock picking. The 4 main criteria that I use within the portfolio is solid management, low cost of production with high reserves on the ground. Geopolitical location of the properties is very important, and solid management.
All right, good advice there. Alex is on the line from Montreal. What's your question?
I'd like to ask you about AltaGas. What's the story with this stock? It seems to be falling on a daily basis. There's supposed to be a big deal going down in the States, which doesn't seem to be going anywhere. So is the dividend sustainable, or is it a stock to own at this point?
Yeah, that dividend now is north of 9%, and that WGL deal that Alex is talking about in the States is taking an awful long time.
Well, AltaGas is not one that I own right now, and we have it as a hold. I can't speak to the dividend. Right now, again, I would start to be very cautious and not start shopping for dividend just yet. If we get a rise in interest rate throughout the year, if we get continued pressure within the markets, if we get a sell-off because pension funds needs to sell, well, this is one of those names that they have to sell. So right now I would be playing defense with a lot of these names, figure out where I would want to raise cash, which ones have solid dividends, and reposition the portfolio to benefit a little bit later. Right now, I think what's more important is to do some serious asset allocation. What do we have? We have a lot of people have made money in the market, in the broad market, for the last 2 to 3 years. Well, start taking some profits out of that, start rotating into other sectors, start buying some negative hedges like gold, and start positioning a little bit more conservative. That would be my advice for people. With AltaGas, I'm more wait and see. Also because they're broadly based in Alberta. And there we have to wait for oil prices to really come around. And right now, well, it's getting harder and harder to raise money. It's actually feeling like the junior and the senior gold companies 3 or 4 years ago when they were going through that downturn.
Very interesting stuff.
How long will be?
How long? That's
how long will
yeah.
Exactly. So, I think taking a cautious stand would be better right now.
We'll be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity to answer your questions about precious metals, REITs, utilities, and energy. So give us a call, toll free, 1-855-326-6266. Because Jaime has not been on the show in a couple of years, instead of past picks, we're going to talk about something that's on your radar. Pipelines, and of course the fact that we don't have access to the Asian markets.
Well, I think that's it's an important issue. Again, I look at the big picture, how puzzles are shaping. I've been talking or discussing a monetary shift coming for quite a while and how it was shaping up. And one of the problems that we have, like you intoned earlier, that we don't have any gold, and are we going to be able to get paid in gold or in Petoryuan if that's the case? Well, I think politically we're too late to the party, right, in terms of having built the pipelines out to the coast, and at some point maybe we can address the issue. For now, though, we are heading north-south on the sale of energy, and because of that, we're beholden to the whims of Mr. Trump, right? Apparently, there was a news blip that he wants to deal with the NAFTA by the weekend. What's going to come out of that?
Get this out of the way.
Yeah, he wants to get it out of the way. So what's he going to do? Give us an offer we can't refuse? Well, the problem without pipelines is he can't, right? And because of that, I like the pipelines. Don't get me wrong, because they're monopolies. But for the benefit of all Canadians, we need to be able to get our resources out to Asia, because that's where global growth is going to happen for quite a while.
So now in that situation, we have provinces going against each other. We have municipalities jumping in, filing injunctions, trying to stand in the way. And then we have the federal government saying, no, this project will be built. We have the authority. We're the federal government. But then nothing seems to go ahead. What needs to be done? Who needs to take the action here?
Well, without getting into politics, because I hate getting into politics, somebody's got to take the lead, and I think it's got to be the federal government. There was a great piece a while back, and I can't remember who it was, but that's what she was arguing, was the fact that the federal government has to take a stand. And, sure, I can understand that British Columbia doesn't want to build any or have any going through, but we have to get our products out. Like, they are here. We need a national strategy that'll benefit. It's funny, because I was thinking when that off piece was done, well, look at what happened in the 80s with the father Trudeau and how much Alberta hates him. Well, maybe here's where the son Trudeau can make a real benefit to Alberta and say, okay, we're going to get these done and push it out to the coast. One way or another, we have to get our products out, right? And for that, we need political willing.
If we don't have that opportunity, if we can't get our product out to the Asian markets, well, what happens to the Canadian economy?
Well, right now we have a discount between our energy price and West Texas intermediary, right? That spread will only get wider if I'm correct, and we have this monetary transition starts to occur, unwinds the credit cycle, credit will dry up. You won't be able to do the fracking, which requires a lot of credit. Well, they have access to our oil anyway, so it doesn't really matter for them. But who loses? It'll be Canadians. What it means is higher inflation. So again, protect yourself from inflation, and the ultimate hedge for inflation is the precious metals, right? Look at the big puzzle and look at all of the assets that are available and how can we benefit from a negative situation.
That's the key there. You can benefit from any situation as long as you know how to play it. We're going to be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity. Answer your questions about precious metals, REITs, utilities, and energy. So give us a call, toll free, 1-855-326-6266. We have Jerry on the line from Vancouver. What's your question?
Good afternoon, gentlemen. Jamie, I've held Petoryuan exploration for a while now, and about in the mid-20s. Its low has been 983 this year, and 52-week high is still 2868. What do you think of it going forward? Do you think that's it for it, or do you think it will recover its losses? And I know it's got a high debt load, and that's one of the issues with it, but what's your view on it? And Greg, can you give us, please, the street consensus?
Sure thing, Jerry.
Well, it's not one that I own, but after looking at our report, I definitely is one that I would consider.
Really?
First of all, we have a $25 target. We think the valuation is quite cheap right now in relation to its peers, and that it should be trading at a premium. It's one that we find that the low cost structure, even despite the low gas price, it deserves merit some consideration. So if you do own it, I would definitely recommend averaging down on this one. Also because of the yield, considering what our report is saying, it looks as though the dividend is sustainable.
Yeah, right now the yield is 6.6%, so it's a nice payout if that holds.
If somebody's looking for dividend, I think this is a very good company. That it doesn't seem as though there's any issues with the dividend, and I think I would definitely take a look at this one further for the income portion of the portfolio. Looks like a really good choice right now and a really good entry point.
Okay, the street
Thanks
says
for the call.
9 buys, 9 holds, and 1 sell. They have a 12-month target price of $14.79. That would be 36% upside from where Peyto closed today. We have Max on the line from Vancouver. What's your question, Max?
Good evening, gentlemen. Thanks for taking my call. First, I would like to compliment you for taking calls on several sectors. Your analysis is spot on and very much appreciated.
Thank you.
My question is about multi-rate. Now today there is an offer to buy it at $9.79 all cash offer. Do you think it's a fair price? I think it's too cheap. They have very good properties in U.S., very well managed, high dividend, translated into Canadian dollars, makes it a big cash cow. This will all be cut off. I'll hang up and listen. Thanks for taking my call. Bye.
I think Max is saying, show us the money.
Sorry, did he say there was an offer for
Electro America extending their proposal to acquire pure multifamily REITs. So,
at what price? 9?
At what price? The price on the screen would be nice.
He said 9, I believe.
Yeah, we're at $7.25 was the close today. Let me go through here. All cash per unit price of US $7.59. So I guess with the currency translation,
so about
$7.59 US.
Yeah, we had a $7.25 target as of March 8th, and it's one that actually I've always I have a little bit of pure. I hadn't seen that news, but more on the bond side. What I like about Pure is the fact that we do need rentals, and that's where the cash flow is coming. So it's always made quite a bit of sense. We're not building rentals, and so because of that, will they raise the price? I don't know. It depends if somebody else comes in. I would imagine, but hopefully they don't take it out. The yield was quite sustainable at 6.3, and it would be sad to see it go.
Yeah, so that was that jump today of 16%. Now the currency translation puts us to $9 and change. We jumped from the low 6s into the low 7s, so I guess the market's waiting to see how this progresses before we push the price up to where that offer price is standing right now. Interesting stuff. Thanks for bringing it to our attention, Max. We got Elizabeth in Bala, Ontario. What's your question?
Hello, fellas. It's really nice to see you again, Jaime.
Thank you.
I wondered what you thought of Slate REIT, given that they're a U.S. property anchored by grocery stores. Do you think they would stand a chance in the rising interest rates and the ever-present Amazon going for groceries? I'll hang up and listen. Thank you.
Here's another one of those big yields that make your eyes wide. 8.9%.
That's right. Well, I think with we like it. We have it with a buy target. But I think when it comes to food and the acquisition that's going on, I see that more as an inflation play by the big boys. If you look at Amazon buying out Whole Foods, and we have consolidation occurring, and it has to do with inflation. The food stores, or the big ones, are always the best way to pass through inflation to the end users, so they become really good hedges. So fundamentally, I think it's signaling inflation on one side, but on the other, it's the fact that the good quality REITs are becoming much more, are being taken out of the market and becoming much more private, right? And that's a bit of a concern. But I think it bodes well for the REIT sector, and definitely the ones that can generate solid cash flow.
We're going to be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity. To answer your questions about precious metals, REITs, utilities, and energy. So give us a call. Toll free. 1-855-326-6266. We have Yuri on the line in Toronto. What's your question, Yuri?
Happy Tuesday, gentlemen. Question about Encana. Is tomorrow a good day to buy it? Do you have it? And yesterday they sold a portion of their pipeline. In your opinion, it's beneficial or damaging for company? Thank you very much, and profitable April to you.
Actually, in Canada is one of those solid companies that I've always liked in the portfolio. We have it with a $16 target. We're still positive with their guidance on what's going on at Encana. Would I still buy it? Again, it's one of those that I would hold on right now, but be ready to pull the trigger if need be. Right now, I've instituting within the, I manage two main portfolios. One's the equity income portfolio, which is more geared to generate cash flow. And within that one, I've been started to use quite a bit of stop losses because I'm more concerned about downside on the market than the companies I have. And because of that, if something sells, I'll sit on the sidelines for a while before I do anything. I've actually reduced positions quite a bit, so I've raised about 17% cash in that portfolio. But in Canada, in Canada would definitely be one of those that I think still looks good, and we definitely like it within our research environment.
All right, the street, as far as in Canada is concerned, 30 buys, 2 holds, and 0 sells. So we have Stephen in Vancouver on the line. What's your question?
Thank you for taking my question, sir. Mr. Carrasco, thank you for coming back. It's been a long time, and I was the one who said you were an opinionated person, and I appreciate that. Now, my question is on Enbridge. I'm looking for safe dividends in the utilities. Would this be a good candidate, sir, or would you have a better choice for me? Thank you so much, and it's nice seeing you again, sir.
Thank you. At this current price, Enbridge is a good entry point. We have it as a buy with a $52 target. I actually have added a little bit of Enbridge for some of my income guys. Again, when you look at the big, solid, blue-chip Canadian companies that are generating cash flow, they're all pretty steadfast and strong. Enbridge is one of those that has been pretty solid on an ongoing basis. Also, I like the fact that they've nicely diversified, not just in Canada but throughout North America, and also I believe they have assets offshore. Hold on. It's mostly the U.S. through their energy partners. But I think Enbridge is a solid dividend payer, and it's one that I would definitely consider for the portfolio and advise people to hold.
Now, the money managers I talk to who don't like Enbridge, they don't like the debt load. It is a big debt load. I've got at the end of 2017, $65 billion in debt on a company that has a market cap of $66 billion.
It is, but with the current price, it has dropped quite a bit. And that's why I think it's at this current level, it's not one to shy away from. But again, keep thinking about the overall market and make sure you have some stop losses in place so that if anything happens, it just doesn't go down more.
You don't get hit too hard. All right, we have Cash on the line from Toronto. What's your question, Cash?
Good afternoon, gentlemen from Canaccord. Well, my question is about Canaccord. Well, it has been flat for over 2 or 3 years now, and I just want to know if there is any momentum going to happen to the stock, and is it something that is weighing down the stock? Is it because of the CRA issue that it is having on the tax issues, or is it because they are not able to make money out of the whole thing? Just have your opinion and hang up, please. Thank you so much.
It's definitely not been easy to be in uranium for the past 6 or 7 years.
Actually, it hasn't been easy to be in any of the commodities. When it comes to Cameco, I'm still on the sidelines with uranium. I think we're going to see quite a bit of it's about when's the price going to turn around. And when it comes to uranium, it's more of a supply-demand globally. You need a lot of nuclear reactors to kick in, and so no, it's not one that I would rather wait until we see some kind of a positive break on the upside within this one. But for now, I think if you're playing Cameco, you should be looking at maybe some of the lithiums, right? There's definitely greater demand for lithium right now, and the price has come on. So look at it more as an energy metal. And when you compare both of those, I think lithium makes a lot of sense. If you own it and you've had it for a long time, well, keep holding if you enjoy it. But no, it's not. I wouldn't recommend it.
You talk about the supply and demand. I just wanted to double check, and I did. It was in November, of course, where we saw a bit of a bump in the stock price. That's because Canaccord actually shut in some of its production, knowing that there was just demand was.
Yeah, the demand isn't there, and because of that, I think lithium will steal quite a bit of the thunder off of uranium for quite a while.
Very interesting. We'll be back with Jaime Carrasco. He's portfolio manager at Canaccord Genuity. He wants to answer your questions about precious metals, REITs, utilities, and energy. So give us a call, toll free, 1-855-326-6266. We have JB on the line from Ottawa. What's your question?
Oh, yeah, hi. My question is on the Torex gold stock. And not long time ago, it was trading 30 plus. And now it is low, it's less than even $10. And I was wondering if there's some heat in it or all the steam is gone, and what would be the future prospects. Thank you. I'm going to hang up now.
All right, thanks, JB. Yeah, it's been a rough ride for this one.
Yeah, it's not one that I have bought. I've looked at Torex before. We do have it as a buy with an 1850 target. I'm more interested in the producers that are generating cash flow. One of the issues with Torex is that when you look at some of their properties in Mexico, they're in areas that I don't particularly like, and that's the only area in Mexico that I think has some geopolitical risk. Because of that, I do like Mexico as an area to mine. It's a great jurisdiction, but here it has some regional issues. Aside from that, they do have cash, and they're getting this mine into production, and even though they had an earnings per share miss, that doesn't say anything when you're starting something up. So this might represent a buying opportunity if you currently own it to buy some. But it looks to be a really good project that they have in Mexico. Again, it's not one that I own, but it's not one that I would really talk anybody out of. There's others that I like a little bit better. I also prefer silver to gold.
Okay, so that makes sense to you. The street says on Torex, 11 buys, 1 hold, 0 sells. Joseph's on the line from Barrie, Ontario. What's your question, Joseph?
Hi, Greg. How are you?
Good. How you doing?
I've been watching you for at least 10 years, and you got an awesome show.
Oh, thank you.
My question here is on Vermilion, buy, hold, or sell.
Vermilion, buy, hold, or sell?
I like Vermilion. I've always have, and the reason that I like it is because they have non-Canadian assets. They've just increased the dividend, which is another positive. So as far as an oil choice, this would definitely be one that I would put in the portfolio. I've always owned this one, and I think it's one of the very solidly managed company. I believe their assets are in Europe.
They have some in France and the Netherlands as well.
That's right.
A bit in Australia, apparently.
Yeah, so because of that, I like the fact that they're not just in North America. So one of the things that I've done within my energy component is that I've switched out of the 100% of the Canadian side, but also start adding some of the foreign ones, even within the REITs. I want to start to figure out or start looking at considerations that will deliver cash flow that's hedged to the Canadian dollar. So that'll give me some better protection in case anything comes of the currency storm that I'm expecting.
A nice yield on Vermilion as well, 6.7%. We got Wayne in Victoria Harbour on the line. What's your question, Wayne?
Hi, Jamie. It's Wayne from Victoria Harbour. Nice to see you back on TV. I've missed you. My question is about Alamos Gold. Apparently they have a clean balance sheet. They just purchased one of the major gold companies. And yet when gold goes up $20, it goes up 20 cents. When gold goes down $10, it goes down 20 cents. And it seems to be going nowhere. What's your opinion on Alamos Gold?
Okay, let's talk about all of the good quality companies, including Alamos. If you look at what's happened with the HUI versus the price of gold, it really has come down, right? So I think right now we have a really good earnings compression. So a lot of these companies are ridiculously cheap, and I think it's a really good entry point. With Alamos, one of the positives is insiders are buying it. So that should tell you something about the company as opposed to most of the U.S. Dow companies insiders are selling, right? I think this one we have it with a 1350 target. It's not one that I particularly own, but it's one that I really like, and I would like to own it if I made some switches within the portfolio. It's a good project. It's a very well managed company, and it's one that, again, if you look at the sector as a whole, there's quite a bit of upside coming once we get a good break in the price of gold, and I think at some point something's got to give. Right, and so because of that, it's one that if you own it, add a little bit more if you can, and just manage your position and be patient.
Very interesting stuff. As we said, Jaime's not been with us for a while, but he's back, and he has some top picks for us after the break. It's time now for top picks. Let's start with your first. You like Franco-Nevada.
Yeah, what I thought I'd do with my top picks is highlight the other portfolio I manage, which is called I call it the Special Opportunities Fund, which I set up as a standalone solution for high net worth individuals and family offices that have no precious metals. There's no participation in the sector. So that's where I've chosen my top picks. I seeded it in 2015. Now, Franco-Nevada is a company that I hold in both portfolios. Franco has been a steady grower throughout this whole period. It's a streamer. It's not just gold. It's a balance of a number of them. And one of the things that I like about this one is the dividend structure. It's designed to increase dividends as cash flow increases. They even have a little bit of oil. So for my more conservative clients, my older clients that need capital preservation, I think Franco-Nevada is a great choice, and that's why I thought I highlighted in this show.
Okay, definitely an interesting one. The next one, you talked about how you like silver more than gold, so perhaps not a surprise. First Majestic Silver.
First Majestic is another one of those companies that right now should be trading much higher. If you look at it, they've just bought Primero Mining. Was it Primero? Sorry. They just acquired, it was a great purchase for them. I believe it was Primero. But they've just upgraded their resource estimate.
Primero, you're correct.
Production continues to grow. The costs are steady around $9. So it's a low-cost producer with a lot of leverage to the upside. What I like about this one, if you look at it in 2015, it was sitting at $3 when before we had the rebound in gold. It went from $3 to $25, and now it's just around $8. I think it's a really good entry point right here, and it has the leverage to the price of silver, and that's why I'm recommending it.
All right, your third pick, you're embracing the new technology, Hive blockchain.
Actually, I like the blockchain. Go back to 2008. Anybody that saw the movie The Big Short, the concerns that the guys in that movie had was that if we had an implosion of the banking system, how do we move forward? Well, I think blockchain offers quite a bit of a disruptive technology, and that I think that it's going to do to the financial system a massive restructuring, because what it's doing is an electronic way to transfer wealth. Right, so it's the ledger. Now, within that, Ethereum is definitely turning out to be one of the key coins. It's not Bitcoin, which is just a coin. Ethereum is an actual payment processing mechanism, and because of that, Hive was the first company that went public within the about last year, and what they're doing is mining Ethereum. Now they're the first to market, so they're being able to really accelerate production. They're producing Ethereum at about $300. So we've just had a double bottom in the cryptos, and now we're starting to see the upside. One of the interesting things about Hive, though, is that Fidelity has completely started to. They've been buying it for their mutual funds.
Really?
And the reason is that they've recognized Ethereum as a way to move forward and save quite a bit of money in all of the transaction and bookkeeping. So Ethereum, and then we had Omers that came out with Ethereum Capital. So Ethereum is definitely being defined as one of those coins that should move forward because of what it does. And that to me is important.
When you play the blockchain space, a lot of people have been adding blockchain to their name, like Long Island Iced Tea and a few others. As an investor, I imagine you got to be careful of that. And the thing that killed me about Long Island Iced Tea, they didn't even have any blockchain plans. They just wanted to put their name, and we'll explore opportunities.
No, I think you have to be. I see it more as playing the high-tech wave in the early 1999, and I think it's about identifying the coins that are going to be more important, and it is uniting us. It's thanks to the internet that we've been able to establish the blockchain, and I think the blockchain has quite a bit of benefit going forward in this cost savings to consumers.
Just want to quickly check on how Long Island Iced Tea's been doing lately. My computer's not letting me play the game. Jaime, great to have you back. Look forward to the next time.
Thank you for having me back.
As always at home, please consult a qualified financial advisor before making any investment decisions. Thank you for joining us, and we hope you come back and join us tomorrow here at BNN.